everybody. Let's dive into this Tuesday trade idea. So, a lot of things are down right now. The market has been selling back today into its 10 period simple moving average on the daily chart. But one of the things holding up right now is GD, General Dynamics. And you can see it's been in this bullish trend for a while. We do have a daily squeeze starting to happen. I have a bullish divergent bar signal, that's this blue bar here, which usually means that we can get a higher high compared to today within the next 3 bars. But what I find really interesting about this daily chart is how narrow the Bollinger Bands are getting, which are these outside blue lines. Typically, when they start to really come in like that and form a pinch, is what I like to call it, it usually is not uncommon to have a squeeze printing with it, which is what we see. But also, it's not uncommon for it to start to get a stronger move either up or down. So given the current trend being bullish, I'm inclined to think that this is going to fire to the upside. We also have some intraday squeezes like on the 4-hour chart happening, doing a very good job of holding support. You can see the squeeze there. We have some true low signals that have been printing during this consolidation on the 4-hour chart. Usually a good sign of a potential discount buy. Still a bit of consolidation on the Awesome Oscillator and compound breakout tools, so I do want to be a little mindful of that, maybe give it some time while keeping my risk on the smaller side in case it does end up going the opposite direction of what I want to see. Here's an hourly chart so you can see just how narrow this range has been getting. We are starting to see some slight bullish sentiment on the lower indicators on the hourly time frame, like with momentum trying to cross above the 0 line. Also has some intraday true low signals, another squeeze setting up. So overall, with the intraday and daily squeezes happening, with how narrow those Bollinger Bands are getting, and the possibility of a bullish divergent bar into the close today when most of the other things on the market have been bearish and red, I like the idea of this possibly getting a bounce up. So there are a few different ways you could look to trade this. One of the ways I'm looking at is going out to the September monthly expiration, a little bit better open interest compared to the weekly expirations that GD has. And looking at the 320, 325, that wouldn't need much of a bounce up here is 320, right? So just testing kind of the highs of this consolidated range would put you right at the money with the long strike. Obviously, if the squeeze starts to fire to the upside, then this would start to go nicely in the money. Now, if you like this trade idea, but you're not a fan of the capital cost, which I'm a little hesitant on given that it's August, not the best month for the market, and we're getting that pullback today, I may consider bumping this a little bit further out of the money. Something like the 322.50, 327.50 brings the price down to $1.48. If I want to use 325 as the long, that goes down to $1.27, or maybe narrow the spread with a 2.5 width spread, that's about 70 cents. That doesn't look too bad. Another way, if you want to keep your longer strike closer to that 320 level, but still keep your risk smaller, would be with a debit broken wing butterfly. So 2.5 debit broken wing butterfly is about $1.02 on the cost basis, so not too bad on the risk. Your max profit potential is just shy of $4 at $3.98. If the trade goes completely in the money because this squeeze and the intraday squeezes really take off to the upside before expiration, that is the benefit of a debit broken wing butterfly compared to a standard butterfly. If this goes completely in the money, it will still have a value to it. The way you calculate that value is you take the 5 points of the debit spread side of the butterfly, minus that by the spread width on the credit spread. So 5 minus 250 is 250. That is what the butterfly would be worth. 250 minus a cost basis now currently showing of $1.15 would be $1.35 profit potential. So still a pretty good risk versus reward, even if this goes completely in the money on you. So I haven't decided which one I want to do yet, but I will likely get into one of these today before market close, and we'll see with how narrow these Bollinger Bands are getting if we can't get that move sooner than later. Thank y'all so much for joining me. Don't forget to hit that like and subscribe button if you want more trade ideas. Check me out next Tuesday. Bye, y'all.